The U.S. and China signed an accord to largely retreat from tariffs applied in recent weeks to each other's goods after a weekend session between the two countries' mediators in Switzerland. In what represents another striking development in the flare-up over recent weeks of the global economic community and world markets, American-Chinese product tariffs did drop from a low of 145% to a floor tariff of 30% for 90 days at first, and Chinese tariffs would drop from a down payment of at least 125% to 10% on American goods. The negotiations were led by Vice Premier Li Feng and Trade Representative Jamieson Greer and Treasury Secretary Scott Bessent on the Chinese and U.S. sides, respectively. We concluded that we share common interests and both of us have an interest in fair trade, Bessent said at a press conference on Monday. Greer said there was a good way forward on the two countries cooperating to fight fentanyl smuggling. The new American tariff levels reflect a floor 10% tariff that rests on all imports and a total of 20% tariff President Trump imposed earlier this year to punish Beijing for what the U.S. alleges is chemicals related to fentanyl being manufactured in China. The delegations praised each other after the negotiations. Vice Premier He described the atmosphere at the meeting as candid, in-depth, and constructive after the meeting, saying it made substantial progress and reached important consensus. The Chinese came to deal this week, Greer said, citing fast-paced progress between the two countries, which also agreed to establish a mechanism for consultations to continue addressing trade issues in the future. Neither side wants a decoupling, said Bessent. We do want trade, we want more balanced trade, and I think both sides are committed to doing that. The previous eye-popping tariff rates, which increased incrementally during April with each side imposing tit-for-tat tariffs, had effectively halted trade between the two largest economies and stunned U.S. consumers and small businesses that overnight saw their Chinese orders jump more than twofold in price. While the reductions in tariffs are a blessing for importers, they are temporary and can be reversed should negotiations between the two countries become acrimonious. While the Chamber greets the decision, there is uncertainty, said European Union Chamber of Commerce in China head Jens Eskelund. Businesses need predictability to conduct regular business and make investment plans. The U.S. says it is currently negotiating for China to purchase additional American goods, a throwback to a trade deal the Trump administration had negotiated with China in a previous trade war in 2020. However, China indeed purchased none of the additional $200 billion worth of goods the U.S. said it would. Upcoming negotiations will be conducted in China, the U.S., or a third nation, according to a joint announcement by the two sides. Are we going to rearrange the fundamental features of the world economy in which China is a gigantic production base and the U.S. is a consumption-driven economy? No, I don't believe we are, said Dmitry Grozubinski, executive director of Geneva Trade Platform and a former Australian diplomat and trade negotiator. But are there things that the two sides can do for one another that would please both sides at least a little? Sure, there must be.